I'm going to do a series of videos that focus on how I would begin to build wealth starting with $100. And there's actually a lot of details that need to be learned before we can invest our first dollar. And I'll start this first video with the concept of investing versus speculating because I think it's critical that we're clear on the differences. An important note, I'm approaching this from 40 years of investing experience. You younger folks out there, you'll get to learn from all my mistakes, which I hope you will avoid. So after the video, let's compare notes on what you would do differently and why. Leave your thoughts in the comments. Also remember to give this video a like and consider subscribing to the channel. So I have $100. My first decision before opening a brokerage account is that I really need to decide if I'm going to be a speculator or an investor. A lot of people don't realize that there is a difference and mingle the two and end up losing money. So I want to be real clear on what a speculator is versus an investor so that we're all on the same page. We know what it is and we can talk about it with the same frame of reference. So as a speculator, I'm speculating or predicting the price direction of an asset. So this can be commodities futures, currencies, or derivatives and stocks, to name just a few. I make money if I correctly predict the direction of the asset, either up, down, or even sideways. So professional traders, they place trades using defined entry and exit rules. They control their losses and they exit once they meet their profit target. Then they repeat the process over again, rinse and repeat. Now, the problem I see with this approach is that the market tends to be very unstable and unpredictable in the short term. So you could ultimately be correct in your assessment, but the price may still move in the opposite direction. The second problem is that you need to set up and track multiple trades with the goal that your overall profits will exceed your losses. So on the surface, this looks like it could be a good deal since I can control my risks through the defined entries and exit strategies. This approach does appeal to a lot of people. Now, while there are relatively safe trades that you can make, such as collars or bull put spreads or covered calls, even these trades can lose money or they can limit your upside gain should the stock take off. So I've studied all of these trades for years and I've traded almost everything. I've traded futures, contracts, currencies, options, etc. And here's what I learned. It's extremely time consuming to research and set up these trades. It was difficult, at least for me, to consistently make a net profit. Since I didn't trade on margin, and I do not recommend anyone trading on margin, I needed a significant amount of capital. So I was working at the time with around $200,000. So even with extensive training, I was still not consistently profitable. And the statistics are grim on this. 90% of stock traders lose money. And I'm not saying it's impossible to become wealthy as a speculator. In fact, I have books of people who have been very successful as stock traders. But the odds for most people are really not in their favor, especially if you don't devote significant time to learning how to trade, implementing strict rules, and following them absolutely religiously. So for most people, and those people who have other interests in life, who have day jobs and so forth, I'd really recommend avoiding speculation, avoiding going down that route. And just case in point, I have a friend who borrowed $100,000 to buy call options on a speculative stock based on listening to an online trading guru. He knew nothing about options and ended up losing all of that borrowed money within about 2 weeks. So my advice is to avoid trading on tips from anyone and to basically to avoid trading, period. Over the years, I've been alarmed by those, like I've seen on CNBC, these shows that push stocks and scream, buy, 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 sell, sell, sell. That is absolutely insane, in my opinion. I think you should never go into any sort of investment or trade without knowing why you're buying and why you're selling. And if you're having to take advice from someone else on when to buy and when to sell, that's a red flag that you should avoid entering such a trade. So trading, investing are completely different worlds. My point here is that we really shouldn't mingle them. Oil and water, oil and vinegar, whatever you want to consider it. So that's my advice. And so a question may come, well, James, should we also be careful about taking your advice? And of course, you should be very careful about taking any advice, even from me. I'm not a professional financial advisor. The purpose of this channel is to share what I think will be safe ways to build and protect your wealth. I always recommend that you verify what I say with a reputable resource such as a fiduciary, and you make your own decisions. Now, I believe that most people, as I've said, are best served by becoming investors rather than speculators. So the next question is, what is an investor? This is someone who buys an asset with the intent of allowing it to grow over time. With this choice, you need to know what to invest in and how to value it. You benefit when that value increases, when the asset value increases. And if it pays a dividend, then you benefit from the dividends as well. However, a stock can lose 100% of its value. As with speculating, the investor needs rules to assess the value of the asset and to determine when it's necessary to exit it. So there are risks and benefits to both speculation and investing. As an investor, you buy things that generate income. Think rental units, stocks, and bonds. Knowledge is required to properly value assets that you wish to buy for investment purposes. Let's say that you have no knowledge of stocks, or you don't have an interest in learning how to read financial statements or stock reports, or that you don't want to risk putting money in an individual stock. Well, there's a good analogy for that. It's the right church, wrong pew analogy. And what that means is that the stock market, or the church generally goes up over time, and it's representation of the economy, whereas the individual stocks, or the pew, they have the potential of going belly up. So for this reason, I would focus solely on low-cost exchange traded funds, ETFs, to invest my first $100. In summary, I've decided, as someone just starting off, I want to build financial security. How am I going to invest that first $100? First of all, I've made the decision I'm going to be an investor. I'm buying the whole church, not the pew. And so therefore, I'm going to be looking at an ETF type of investment. So in the next video, I'm going to show you the specific vehicle I'd use to invest that $100 in, to turn it into a long-term asset. And we're going to take a closer look at ETFs and how to invest in them. I look forward to seeing you in the next video, and thanks for watching.